Hello and welcome to Leaders of Tomorrow, India's only daily television platform for small businesses. In the wake of the coronavirus outbreak, analysts the world over are studying investor sentiment. And a question that has bubbled to the surface in the minds of many is, has real estate investment taken a back seat? Or is now perhaps the most opportune time to invest in real estate and make money multiply by way of property ownership? It's a tough topic and it deserves to be approached from a 360-degree perspective. And fortunately, tonight on the show, I'm joined by a team of subject matter experts to help me do just that. We have with us Senior Vice President and Independent Project Manager with NRIA, Art Scutaro. Senior Vice President Operations with NRIA, A La Mattina. Vice President Construction Analysis with NRIA, Anthony Ulisse. A leading concern when it comes to real estate as an asset class is perhaps the sheer lack of liquidity. How at NRIA do you alleviate that concern in your customer and investor interactions?
Sure. Well, right now what we're seeing as a specific down market is commercial real estate. So as a company, we actually only involve ourselves with residential real estate. And, especially in the rental market, regardless of what's happening, like now a pandemic or maybe a market crash, the cheapest source of shelter is a rental. So whether the market is a buyer's market or a seller's market, it's always a landlord's market. In our efforts to gather new real estate, we stay on the residential side. So I think, and right now rates for single family homes and condos and things of that nature, again, residential properties, they're the lowest they've been in over 30 years here in the United States. So that's how we're actually dealing with this current situation. And because commercial real estate is down, that creates an opportunity for us to buy more property in a distressed situation. Again, better pricing for us, more money for our clients.
Do you believe that the outlook towards real estate investment has changed? And are you perhaps now witnessing serial real estate investors now migrate their money towards presumably safer asset classes?
Oh, definitely. I mean, with the virus and what happened with our current stock market, with the up and downs of the current market, a lot of people are moving their money from stocks into fixed assets, such as real estate. And we present one of the best platforms that I can think that's around.
I know that NRI has found its place amongst a premier pool of international property developers and investment managers in the real estate arena. But help me better understand the firm's focus areas in terms of market type and property type.
Our product line at this point in time, like I say, is the mid-rise to the high-rise buildings, 100 to 150 units, with parking, and give the individual a complete living environment. Concierge package pickup, parking, and easy accessibility to commuting.
Investors, perhaps more so now than ever before, of course, they crave transparency, but they also crave flexibility. So what sort of choices are built into the investment opportunities that NRIA presents, in terms of perhaps level of investment or in terms of perhaps the time horizon of that investment?
In our model, we do have different investment thresholds. So it depends on the financial wherewithal for the investor and what they want to do with their portfolio. In our model, a private placement vehicle is how we utilize investor funds. So when they come into a private placement opportunity, they're actually investing in a pool of properties, not just one. The strength there is diversification, not only in location, but in the use of the property. So in our model, we're utilizing this private placement fund. If an investor wants to come in as low as $50,000, they would reap a 16% annualized targeted return. On $100,000, that targeted return increases to 18%. On $150,000, 20%. And then for our larger investors, at 500,000 or greater, not only do we increase that return in the fund to 21% maximum, but we also create cash flow for our investors. Other opportunities like joint ventures, so they can receive a bonus on top of their return. But these are the ways that we're actually increasing returns for investors. They're coming in, through this private placement as an equity partner, but none of the liabilities. So they have the best of both worlds, indirect ownership, but no financial liability, no tax liability, no insurance liability. And we've been keeping our clients safe like this, like I said, throughout the years with the strategic way that we approach these markets and we purchase real estate.
Now, NRIA has, of course, forayed into the Indian market with full force. Give me a sense of some of your unique observations when it comes to the Indian real estate investor. What are the criteria that essentially make for a deal maker versus a deal breaker?
The Indian investor is like any other investor. They're concerned about their money, especially since they're sending it overseas. And I think we give that investor the cushion to know, as Art said, their money is invested into a fund that's diversified by 18 properties today. So as one property might be excelling, maybe another property is not built yet. So it's just sitting there. The overall function of the portfolio is what gives the Indian investor or any investor their cushion and their, comfort level. And again, it's trust. You have to build trust up. You have to build a relationship up. And as long as you have built that trust up and you can show any investor that this is a good product, we stand behind it. We even have a corporate assurance, because I can't say guarantee in India, that their money is safe.
Help me understand NRIA's approach to managing and mitigating risk.
Well, it all starts, as you've heard in real estate, right? Location, location, location. So we handpick our locations where we're working in local municipalities where we have foreknowledge of property where we can build more on it than maybe the current seller realizes. By doing this, we're decreasing our overall cost. And then, of course, we're looking for unfair advantages as well, like tax abatements. But when you're buying under market value, building at wholesale, and then on top of it, being able to have a tax abatement that's transferable in your outsale to the new owner, we're actually creating margins of 26 to 31% before any capital gets put in. The importance there is that you have this cushion of equity not created by cash in. If there is a market correction, we have this cushion to absorb that. And that has been a key. We've been in business now closer to 15 years, and we can humbly boast that we have 0 project failures, 0 foreclosures, 0 lawsuits. And our approach to the market, creating this equity before capital gets, put into a property, has given us that strength so that if there is a market correction, we can weather that storm because no one's losing capital in.
NRIA, of course, recently won big at the World Property and Investment Show, which I believe is a platform that showcases real estate projects of international stature. So help me understand, what are the future projects in the NRIA pipeline?
In the current pipeline, we have our Ocean Delray project down in Delray Beach, luxury condominiums that are selling in the $7.5 million range per unit. We have Gulfstream Views, which is also in Delray Beach. The average selling price there is going to be $2.5 to $3 million. That's our luxury down in Florida. In Center City, Philadelphia, we have a project of townhomes, and they're $2 million a piece, 4 stories, living up on the roof, outdoor living. And then on the Gold Coast, Union City, we're on the cliff overlooking the Hudson River, looking at Billionaires Row, going into Midtown Manhattan with luxury condominiums that are going to be $2.5 million and up, and beautiful penthouse units that are 5,000 square feet on each of the 4 buildings we're building there on the cliff.
Securing permanent lawful residency in the United States is very competitive, and EB5 is another offering under the NRIA umbrella that's essentially making it possible. Help me demystify what the process entails.
Well, we have our own platform. It's nriaeb5.net. Last year, we had 2 major projects in that platform for EB5 funds. We had 4901 Bergen Line Avenue, the station, which was a 97-unit apartment complex, which is currently being built. And our other project was Hoboken Heights, as Tony mentioned, a luxury 55-unit complex overlooking Manhattan on the New Jersey side. Our EB5 platform is very aggressive for our investors. I think we pay a higher return than most EB5 platforms. And as anything else, the EB5 platform, as designated by the USCIS, has to say we cannot guarantee your funds, but we try to give any investor that comes, especially EB5, the assurance that their funds are safe going into an EB5 network with us.
So for us, we're staying local here to the U.S. where we know our environments.
We always look buying a property at a price that we know will produce a profit for our investors.
On a long-term basis, the real estate market will continue to perform. There's opportunities in today's marketplace as a result of the weaker players that, are presenting themselves to us now.
While investors are becoming increasingly cautious, they're also becoming increasingly creative, I believe. I've had several conversations with individuals who are considering diverting their retirement savings towards investing in real estate. How might you guide someone in that position who's looking for words of advice?
I think it's an excellent idea to be diversified, especially in your retirement funds. I mean, you're depending on those monies to grow. And obviously, when you're offering, as we do, 16 to 21% annualized targeted returns, I don't think there are many retirement vehicles that are offering that type of return. One of the benefits when utilizing those funds to direct to us is that the broker can't make a commission off them. In our model, that's not allowed by the SEC. So for us, we utilize a trust company, and it would be an outside company, directing from whatever vehicle or entity they're using now would go to the trust company, and then those funds would be directed to us. And then, of course, any profits earned would go back to the trust company. So the trust company acts as a fiduciary or a mediator, reporting to the client, reporting to the government, making sure that those funds stay under that umbrella of tax deferment. The benefit for the investor is their returns are multiplying at a much greater and rapid pace, helping them to collapse on their retirement timelines. And at the same time, these trust companies typically take less of a percentage because it's not based on a commission, it's based on a flat fee. So not only is the investor saving money utilizing a trust as a fiduciary, but exponentially growing their portfolio. I mean, typical returns, today in the market are much lower than 16, 18, and 20% targets. And that's how we're assisting clients. I would say a good probably 25% of the funds that we see come from retirement vehicles.
Certainly, that's very heartening to hear. And I'd be curious to understand how your returns compare with those of your competitors in the marketplace, and also give me a sense of how the payout is structured. I think that's of incredible interest to our viewers.
In the marketplace, through the stock market, you have quite a few investors that invest in REITs. REITs contain commercial property. So right now, REITs are down very, very low. Some REITs are paying half. Some REITs are not even paying out today. So in our portfolio, we're outside of the stock market. We're not affected by the ups and downs and the volatility of the stock market, especially, to just taking in considering what recently happened. About 3 months ago, the United States stock market crashed because everybody left at the same time due to the pandemic They panicked, they pull their money out. And we cause our own problems sometimes, right? Our economy was booming. There was no reason to do that. So in our model, we prevent that. We protect our investors doing things like that. In our investment opportunity, we do have a term. Investors can leave if there's a problem or a hardship in 2.5 years or 30 months. But the targeted returns are hit over a 5-year period. During that time, the investor at $30,000 a year or 20% on $150,000, for example, would receive $150,000 profit. They're doubling their money in 5 years. What we do is to create a kind of mixed environment where we're bringing what we refer to as mailbox money. Half of their return would be paid out as cash flow. So taking this example, that's $15,000 a year, or $1,250 per month, assisting elderly people, the opportunity to live on that money. Right when you retire, you want your money to work harder than you. So we're offering very high cash flow compared to the marketplace. I don't know of anybody who's offering 10% of their annualized investment as a return paid monthly right to their bank account.
Anthony, all mathematical models aside, home ownership is ultimately a very human experience. So what do you believe are the qualities that ultimately attract investors to the NRIA brand?
Well, the human ownership aspect of your living environment and your kitchen and the features that you have in it, along with your bathroom. We go through great pains to design the perfect product for the most discerning buyer. So we're going to give you home automation. You're going to be able to control all aspects of your environment remotely from within your home as well as outside of your home. We're going to give you a gourmet kitchen. We're going to give you a master bathroom with a shower and full marble floor to ceiling throughout. So what's attracting investors is that type of finished product. And when you shop that against your regular tract builders, your public home builders, your private home builders, not many people give that product. They're not focused on that marketplace. So we have the right place to shop for that, for the most discerning buyer. And investors like that, right? So that you can live in it, you can rent it out as an investment and produce income.
And Glenn, so much of being a successful, player in the real estate space is about having local expertise. So what's NRIA's approach to developing those local expertise, given that it's essentially a global firm? How do you strike the right balance between, as they say, thinking globally but acting locally?
Well, again, we build in the markets we know. And we have our real estate partners that bring us deals. So we always look buying a property at a price that we know will produce a profit for our investors. Like anything else, in real estate, it's the old adage, location, location, location. You find the right location, you build a quality product, the investors, the buyers will come. So, a lot of our diversification on properties comes with our real estate partners. They bring us deals all the time. We're very discerning on looking at these deals. And ultimately, we only take the deals that make sense for us and our investors.
And what are NRIA's expansion plans going forward in India and well beyond?
Well, we very carefully choose our markets. So one of the things that we're doing is right now we're in 4 major U.S. markets and then in sub-markets within those markets. We're looking at possibly expanding to additional marketplaces, additional states here in the United States. I don't think we'll be moving out of the U.S. In an international construction type of environment. We're going to be staying here. But one of the things we've done, we've targeted the top 4 most densely populated municipalities here in the United States, where statistically 80% of those residents are renters. And we are literally a 15-minute computation to New York City and Jersey City. Here on the East Coast, where we reside as a company, they're the 2 major cities where there's employment and entertainment.
By way of closing comments, give me a sense of your read on the real estate market going forward, both short-term and long-term. on a scale of, say, optimism versus skepticism?
Short term is stable, and long term, we're going to recover. The COVID-19 situation will be addressed. A vaccine will eventually be put into place, and we will recover. So on a long-term basis, the real estate market will continue to perform. There's opportunities in today's marketplace as a result of the weaker players that, presenting themselves to us now. So there is opportunity to pencil in, as Glenn and Art have mentioned, profit targets that are satisfactory to our group. Short term, we're surviving, the market's surviving, and long term, we're all going to survive, and things are going to continue as, successfully as they has in the last 14 years for NRIA.
Gentlemen, thank you so much for making the time and for speaking to us here on the Leaders of Tomorrow.